Good morning, fifth year accounting students. I'm just going to correct the homework that I gave you yesterday, 2010 Norris PLC. So basically, we'll start off by looking at the reconciliation of operating profit to net cash flow from operating activities. Where you get this operating profit is basically 179 there, similar to what you did in 2014 Doyle PLC. Okay, in yesterday's work. Okay, so depreciation charge of the year. How do you get 65,000 is the next question. Okay, so I suppose the first thing I should maybe suggest is you go down to all these notes and read them to make sure that is there any depreciation mentioned here. So in note 3 it says depreciation for machinery. So that's 55 grand. So I would go straight up here and I would put in 55,000 straight in there, of 55,000 straight away. Okay, and then I'd see what other depreciation is there in the question. Well, what other asset is there in the question? Well, there's buildings, land and buildings, but we know that land doesn't depreciate, so buildings does. So the difference between 50 and 60,000 is the other 10 grand. So we just add 10 grand onto 55 and you get 65 grand. Now, the next thing then is, did we make a profit or loss on, an asset? So in this instance here, we have to go down to the notes again to see, did we dispose of an asset? So there were no purchase of machinery during the year, but machines was disposed for 30 grand. So there was disposal of machinery. So what do we do then? We open up a machine, a depreciation, and a disposal account, to cover that part, to see, did we make a profit or a loss on disposal? Because we don't know otherwise. Okay, and that's the only way that we can find out. So we open up a machine account. So on the machinery account, we owned last year 450,000 worth of machines, and this year we own 380,000. So we obviously have disposed of an asset, but we're not given what the disposal figure is. Now, if I go back over to the question for a minute, he says there were no purchase of machines, but machine was disposed of for 30 grand. So I just want you to write into the question, the machine was disposed for 30 grand, but it cost originally 70 grand. So there's a trial and error, there's a way of finding it out, like we've done in previous questions. Okay, so 70,000 is the figure. So it's the difference between 450 and now what it's worth. It was 70 grand. So what do? Credit the asset account and debit the disposal account with the original cost of the asset. So that's that transaction there. Now you open up a depreciation account, for machinery. It's 175 versus 200,000. How do I get those two figures? So basically you have machinery account worth 175,000 for machinery depreciation, and now it's clocked up to 200,000 a year later in 2009. So go back over here. Depreciation obviously goes on the opposite to fixed assets in a separate account called depreciation of machinery. So 175 and 200,000. So the question is then, what depreciation was there for this year in relation to machinery? So we have learned earlier on in note 3 that basically depreciation for machinery is worth 55k. So put it in there, add them two together, get 230 grand. Put 230,000 over there, take the difference between 200 and 230, and this is the unknown figure. So what does that 30,000 mean? That means that the asset that was worth 70 grand has clocked up depreciation of 30k to date. So what do? Take it out. So by putting it on that side, it's taking it out. It's reducing what the actual depreciation is because the asset is now removed. Okay? So basically then you bring the 30,000 down here. Then in the question, he tells us, in one of the notes, that we received 30,000 when we sold it. And then the difference between 70 and 60 is really 10k, and that's the loss on disposal. So refer back just for a minute now, just to make sure that you're in order with this. Okay, so therefore, in the notes down here, he tells us there were no purchases during the year of machinery, but machine was disposed for 30k. So now I know that we got 30,000 from the proceeds from the sale of this machine. Hence the reason why we put 30,000 in here, and technically in there, that 30,000. And technically, for every debit, there's a corresponding credit, and that debit transaction would be to debit 30,000 into the bank, meaning that we're increasing the bank account by 30 grand because we're selling and we're getting rid of the asset, but we're getting cash for 30 grand. So the cash flow should be up by 30k. Okay. Now, so that's basically that part. So now if I just track back for a minute and finish off this here, right, I want to look at increase in stock. So the loss in sale of machine is 10 grand, which you've established. So if it's a loss, it's a plus. And if it's actually a profit, it's going to be a minus. And if you look back at your template, which I've given you last week, you'll see all of that information there. Now, following on from that, you have an increase in stock. So stock has gone from 194 to 212. It's gone increase in stock, minus 18. Increase in debtors, minus 8 grand. An increase in creditors, gone from 255 to 280. It's gone increased by 25, so you increase it. Okay. Now, following on from that then, all you're doing is adding up all those together or taking them away depending on the minuses, and you get 253. Right? And then you're asked to do the second part. Calculate or put together a cash flow statement of Doyle PLC. So all we do is operating activity, net cash inflow from operating activity because it's a plus 253, hence it's inflow. So you're more or less copying all of that just down here, putting in 253. Moving on from that then, basically return on investment servicing finance. I want to show you how to calculate an interest on debenture. Now we have interest on the loan of 18,000 at the moment in there, but down here it says interest due of 5 grand. So basically what we do is we open up an interest account, and I'm saying that last year we had no interest due. This year we had 18 grand and 5,000 interest is outstanding at the end of this year, 2009, and that's a current liability. So current liabilities have credit balances, lads, underneath the line. So therefore, that's where I'm putting 5 grand in there. So you add up the greatest side, which is 18, put the 18 over there, and the difference between 5 and 18 is 13k. So that's the unknown figure. Or if you understand that well, all you'd have to do is just put in 18,000 minus 5 equals 13 and put in 13,000 in there in the cash flow statement as a minus. Why? Because you're paying only 13 out of 18 interest at the moment, okay, because you just can't afford it, basically, okay? Right, on another point, corporation tax. So corporation tax is tax on companies' profits. So I'm saying to you, the tax last year was 40 grand, tax this year is 45, according to the balance sheet. But up here in the profit and loss account, it's telling us that the tax for the year is 43. So now there's 3 different figures. So we definitely have to open up what we call a tax account. So what we do is last year's tax 40,000 liability coming from the current liabilities last year. This year, 45,000 liability ending this year is not paid for yet because it'll be paid next year. During the year in the profit and loss account in 2009, right, this year, we have assigned 43,000 in depreciation. So you add up those together to get 83,000, bring 83,000 over there, and the difference between 45 and 83 is what the actual cash flow statement should be, or the bank figure. So basically, you're going to reduce the bank or reduce the cash flow by 38 grand when we go to the cash flow now, which is just over here in a moment. So if you go up here, minus 38,000 goes in there. So that's the unknown figure that you won't find in the question, that you did find in the question when it comes to ordinary level, but not at higher level. Okay. Now, following on from that, investment. So capital expenditure, financial investment of 35,000. So where am I getting that question? Where am I getting that 35,000 from? So it's gone from 25 up to 60,000. There's a difference of 35,000. What is that? That's basically the increase that we as a business have increased our investment from 25 to 60,000 in some organization. So therefore, we have to reduce our cash flow by 35,000. So the money's coming out of our bank account, out of our cash flow, this current year's cash flow, to pay for extra investment that we have invested in. Right? payment of acquired fixed assets for 75,000. Now, fixed assets. So if you actually go over to the question here again, right? So basically, I want to address the actual other fixed assets like land and buildings. Now, land and buildings, I've opened it up there, an account there, and a depreciation account as well. So where am I getting all these figures from? So go back to the balance sheet again on land and buildings. So if you go to land and buildings, it'll say 725 last year, 800,000 this year. Okay. So, and the depreciation, just while we're at it, is 50 versus 60. So then, basically, if you go down to the buildings and land, it'll tell us something to do with there were no disposals of buildings during the year, but new buildings were acquired, were bought. Now you can really write down there in the actual physical question, well, what did we acquire? We must have acquired the difference, okay, which is, right, 75,000. Right. So he doesn't mention the acquired figure as in the purchased figure, but we take it that the difference between 725 and 800,000 is the acquired figure of 75 grand. So what does that do? If we're buying more land and buildings, it means that it reduces the cash flow down by 75 grand. We're getting more land and buildings, but we have to pay for it. So that's where that 75 grand is coming from. Okay. Now, another point is then receipts from sale of fixed asset. So again, earlier on, I discussed when I was doing the disposal of machinery account, we actually disposed of machine for 30,000 euros. So therefore, we're selling machinery, we're getting 30,000 into the bank account. That's a positive development for our business. So we increased the actual cash flow by 30,000 euros. Right? Following on from that then, there's dividends paid during the year. So if you go up to your question there, dividends paid is 64 grand, put in 64,000 in there. However, if there was dividends down here in the current liabilities amount falling due within 1 year, we would do the exact same thing as we would have done for taxation. Okay, so we'd draw up another T account for dividends and do exactly what we do with taxation, just put in the dividend figures instead. Okay, so watch out for that in next questions. Okay, so what do we do after that then? We've nearly the cash flow statement done. So all we do then is put that into your calculator, minus, plus, minus 58,000. So that's a plus 58,000. So net cash inflow before liquid resources and financing is plus 58,000. Next of all is management and liquid resources. Purchase of government securities is 15 grand. So where do we get our 15,000? You go to 0 to 15 grand, government securities under current assets. So in this instance here, you put in 15,000. So you're investing another 15,000 in a government stock like the central bank, like the post office or something like that. And what is it doing to reducing your cash flow? Okay. Now, the next point is to look at what the story is with loans. The loan last year was 220. The loan now is 140 grand. So there's a difference of 80,000. So therefore, we have had to pay. We opted to pay 80,000 back to the bank to reduce the bank loan from 220 down to 140. What does that do to cash flow? It reduces cash flow by minus 80 grand. Receipts from issued shares, right, is gone from 20. So basically it's 660 up to 680. So it's gone up by 20,000. Receipts from share premium is gone from nothing to 3 grand, 3 grand. So all we do is put that in your calculator, minus, plus, and you get 14,000. So that's a minus 14,000. So therefore, there's a decrease in cash between 2008 and 2009 in this question of a decrease in 14,000 euros. Now, what I have shown you yesterday in Doyle, right, is much the same as what I'm going to show you now again. And hopefully you've got this in your homework last night anyway, right? So I wrote down this year 2009, last year 2008. I want to see, is that minus 14 grand correct? Okay. So what I do is I look at last year's first and I say the cash, the bank, the cash, and the bank overdraft. So I kind of just look at 3 items there to see the cash movement, basically, the change in the cash position. So in this instance here, I look at the bank is 6 grand, the cash is 2,000, the bank overdraft is nothing. So I say 6 and 2 is 8, so therefore 8 grand. On my debit side, on my 2009 figures in balance sheet, the bank is nothing, so put that nothing in there. The cash is 3 grand is in there, and the bank overdraft is 9 grand, so I put it minus 9,000. So if you tot up those together, okay, 6 and 2 is 8, okay, and the next thing is 3 plus 3,000 and minus 9 grand is minus 6,000. All right. So if you look at a range in 2008 to 2009, if you're actually just imagine it's a maths number line, right? And basically it's plus 8,000 all the way back to 0. That's 8, right? And then go back reverse, as in minus. Go through 0 and minus 6. So 8 to 0 is 8. And then from 0 over to minus 6 is another 6. So 6 and 4, right? 6 and 8 is 14, right? So it's going from 8 to 0, that's 8. And then another 6 is 14. So therefore, it's gone from a plus 8 to a minus 6. So it's gone for a decrease of minus 14 grand. So it's perfect and it's right. Okay. And the last piece to this is then reconcile the net cash flow to movement in net debt. So what do we do to actually accomplish this? Well, we'd say decrease in cash during the period is minus 14 grand. So by doing this, we know that that's perfectly correct. Cash used to purchase government securities is 15 grand, right? So basically government securities is 15 grand. So basically put the 15,000 in there. That's plus because it's money that we physically have at the central bank, the post office. It's money we could get access to if we needed to. Okay, cash used to purchase debentures is 80 grand. So change the sign from minus 80 to plus 80 in there. Okay, so the loan has gone from 220 down to 140 grand. So that's plus 80. Change in the net debt position. So if you put into your calculator minus 14 plus 15 plus 80, you should leave yourself with 81 grand. Now, next piece then is to find out what the net debt position was at the beginning of the year. So the first 2000 and basically 2008. Okay, so 2009 actually, and basically then it's going to be the same down here. It's going to be 2009 as well there. So what do? You look at the long-term loan first of all is minus 220,000. That's that figure there, and work backwards. Then to check to see. Have we got any bank overdraft? No, not in that one. Not in this year. Back up here, have we got cash? Yes, 2 grand. Have we got bank? 6,000. Yes, we do. Have we got a government security? No. Right? So all we do is we put in minus 220,000 long-term loan, plus 2,000 cash, plus 6,000 bank, and you're left with minus 212,000 when you've left with those figures there. Okay? Secondly, then, you look at the net debt position at the end of the year. Minus 140,000 is the long-term debt. Okay. Next of all, then, is you look at the long-term loan, another minus 9 grand, plus 3 grand cash, and plus nothing for bank, and plus 15,000 government securities, because you have to weigh up the difference between what money you have in cash or cash equivalent versus what the debt is. So that's a minus 140,000 there, guys. Minus 9 grand long-term debt, bank overdraft, plus 3,000 cash, and plus government security of 15 grand. And when you add up those together, you should take the difference between 81 and 212, and you're left with 131. And if you do it this way, you should left with minus 131 as well, and you know you're balanced. Okay? Now, basically then, that's your homework. Okay, corrected basically there. So what we've looked at is Norris PLC 2010. I hope you're okay with that. Tomorrow, Wednesday, right, we will be back live and I will actually get on to another question. And now what I want you to do for homework is the following. Is the 2006 Butler PLC cash flow statement 1, much the same type of question again, same type of transactions down here, right? I want you to have a major go at that and do part A, right? Part A, which is 48 marks, which is the majority of the question. Okay. Now I will be putting up this question, right? All of these notes up on the website, okay, up onto Microsoft Teams, and you'll be able to actually look at the physical question then, right, in the next while. Okay, thank you very much.